Hey everyone, it's Duane Buziak, your Mortgage Maestro, proudly serving Virginia, Tennessee, Florida, and Georgia. Welcome back to another market update where we break down what's really happening in the housing and lending world, without the confusion. Today's topic, the mortgage market shift of 2025, what's changing right now, and how homeowners can stay a step ahead as we move into 2026. There's a lot of noise out there, from Fed meetings to inflation numbers, but I'll simplify it all for you so you can make clear, confident decisions about your home and finances. Let's start with the big news. Mortgage rates are stabilizing. Finally. After months of ups and downs, we're seeing consistent signs of balance. The Fed has kept its benchmark rate unchanged, signaling patience as inflation gradually cools. Meanwhile, wage growth and consumer spending are easing in a healthy way, giving the economy a softer landing instead of a sharp slowdown. That's translating to steady mortgage rates across most loan products, conventional, FHA, and VA. We're sitting around the mid-6% range for many qualified borrowers, and most experts believe we could see modest rate relief in the first half of 2026 if inflation continues to improve. Now, here's something many people miss. Stability matters just as much as low rates. When rates stop jumping every few days, it becomes easier for buyers and homeowners to plan. That's what we're finally seeing. More predictability, better timing for refinances, and more confidence in the market overall. And that confidence is driving another big trend, the rise of digital home equity access. Homeowners are turning to tools like digital HELOCs and streamlined equity loans to unlock their property's value without touching their primary mortgage. So, what exactly is fueling this digital shift? It's simple: speed, convenience, and transparency. With platforms like the ones we use here at Coast to Coast Mortgage, you can complete most of your HELOC process online in days, not weeks. You get real-time updates, faster approvals, and clear visibility into every step. This evolution is part of a broader transformation in lending, and it's helping more homeowners take control of their finances. Now, let's talk strategy. If you're sitting on home equity, and statistically, most U.S. homeowners are, you have options. A home equity line of credit, or HELOC, gives you flexible access to that equity as you need it. You can draw, repay, and redraw, similar to a credit card, but backed by the value of your home and at a much lower rate. A home equity loan, meanwhile, gives you a lump sum at a fixed rate. That's perfect for large planned expenses like renovations, education, or debt consolidation. It's steady, predictable, and great for those who prefer a consistent monthly payment. Both can be smart. It just depends on your goals. So here's the question I always encourage my clients to ask. What do I want my home equity to do for me? If your goal is flexibility, a digital HELOC might be ideal. If your goal is stability and structure, a fixed-rate loan might make more sense. The key is aligning your financing tool with your financial mindset, not just chasing the lowest rate. Because remember, the lowest rate doesn't always mean the best strategy. Now let's zoom out for a moment and look at what's happening nationwide. Housing inventory is slowly improving as more new homes hit the market. Builders have ramped up activity, especially in the Southeast, where states like Florida, Georgia, Tennessee, and Virginia remain magnets for growth. That's good news for buyers, more options and more competitive pricing. But it's also good news for existing homeowners, because strong demand means your equity is holding steady, even appreciating in many areas. That's why so many people are using this time to restructure their finances, locking in stability, improving cash flow, or preparing for future investment opportunities. Here's something I want to emphasize. Economic cycles always shift, but financial preparation is timeless. The homeowners who do best aren't the ones who try to predict every move of the market. They're the ones who plan ahead, understand their options, and make informed decisions before everyone else rushes in. That's exactly what we help our clients do at Coast to Coast Mortgage. And thanks to your trust and support, our company has now surpassed $1 billion in loan volume for August 2025. That milestone represents more than just numbers. It represents families, veterans, and homeowners achieving their goals. So, from me personally, thank you. As we head toward 2026, my advice is simple. Stay informed, stay flexible, and don't wait for perfect conditions. Because by the time the headlines confirm a rate drop, competition will already be heating up. Right now, you have time to plan, to assess your home's equity, and to explore digital lending tools that can put why